What is up, YouTube? What is up, Canada? Matt McKeever here today. In today's video, we're going to be talking about a Fintech IPO that's coming out of Canada, as well as touch on just some other Fintech IPOs that have recently occurred, and just kind of checking in general on, how's that all going right now in this crazy stock market. So specifically today, we're going to be talking about what is Payfare. Are there any comparable Canadian Fintech IPOs? How do the American Fintech companies compare? What are some of the issues with recent IPOs, as well as what are some of the other reasons to avoid IPOs, or should you be avoiding IPOs as an individual investor? So specifically today, we're talking about filing an initial public offering. That's what an IPO is. It's a way for a company to get funding to pay off debts or expand their business, essentially raise capital or get access to ideally cheap capital, as opposed to traditional funding routes from big investors or in other markets, or raising just debt, right? Usually we've got equity or debt instruments when we're looking at raising capital for our business or our business endeavors. So Payfare is just the next company to take the IPO route. So Payfare is a Toronto-based fintech company that offers software for the gig economy worker. The software is used by several big companies like Uber, Lyft, and DoorDash, and they're proposing the IPO in order to strengthen their available capital in order to pay off about $21 million in USD in short-term debt obligations that they currently have. The leftovers will then be used to help grow the business. After the TSX-based IPO, Payfare plans to expand its offerings to new segments. So how will this IPO go? Obviously, no one's got a crystal ball. I do not have a crystal ball, that's for sure. But let's talk about some recent Canadian comparables. So when we're looking at other Canadian fintechs, we've got companies like Gold Money, which helps customers access the precious metals market, and Points International, an e-commerce loyalty program with partners such as Air Canada and Air Miles, are at the top of the public Canadian fintech list. And yet both of these companies have a market cap of under $300 million Canadian currently, which makes them relatively small compared to, US standards. So other Canadian fintech companies trade shares at under $1 and, have even lower market caps. So there definitely is a little robust fintech environment here in Canada, but at the same time, understand that there's not massive players the same way that maybe you would find in the US. So when we're looking at, American comparables, back in late 2019, Bill.com stock surged 60% in the days following their IPO. They managed to raise $215 million USD, and their stock continues to rise a year later, hitting a high of $185 USD on February 5th. So after aiming to sell shares at $33 USD, a piece, GoldRx stock price hit $56 USD a couple weeks after the IPO, raising $1.1 billion in funding. And interestingly enough, the stock has been up and down since then, just reaching $56 USD recently. So talking about some IPO issues that maybe you guys would want to be aware of, or maybe some big IPOs that haven't happened yet. One that really stands out is the Ant Group, so whose IPO was rumored to be the biggest of all time. The Chinese fintech company was valued at over $300 billion USD and was seeking to raise $34.5 billion USD with the offering. But 5 days before the scheduled listing, Chinese officials said that the company didn't meet the certain regulatory and disclosure requirements, and Ant Group now has halted its IPO for at least 6 months, and it's likely to see its valuation cut because of this. Some people saying even the valuation could be cut in half. So other reasons to potentially avoid IPOs, or at least be very wary before you jump in blindly. Firstly, companies may experience a lack of control due to public trading. The volatility of the markets can certainly put some companies off and can really challenge some CEOs, right? Depending upon what type of investors end up, flocking to your stock. Secondly, fintech companies have recently had a multitude of investors to choose from, and they're getting all the money they need through these investments. So companies like Robinhood contemplated IPOs, but got $300 million USD in one investment round, and recently raised even more after the GameStop debacle, which we covered in previous videos. So, these reasons won't stop other companies from filing IPOs. Bumble is currently attempting to raise $1.8 billion USD by selling 45 million shares at around $38 USD per share. And this could push their valuation to $8 billion USD. Definitely right now in the world of fintech and just, internet technology companies in general, we definitely see the sentiment of go big or go home. So I'd love to hear your thoughts. Are you actively trying to get in on these IPOs? Do you like to watch and see what happens and maybe wait a few months before getting into the IPO? Because oftentimes there's a lot of hype, understand, around an initial public offering. Obviously, they're going to have a lot of consultants and a lot of market thought leaders that are going to be trying to drive awareness and interest in this potential IPO. So, my personal experience working as a CPA for a publicly traded pharmaceutical company, I can remember when our CEO and our CFO were, doing the rounds, right? Like when they're going to trade shows, when they're really just pounding the pavement, trying to raise awareness and create interest to drive people to invest with our companies, whether we were looking to sometimes sell warrants or options. Sometimes we were looking to do just private placements, and sometimes looking potentially at doing public placements. So again, love to hear your thoughts, your opinions. Are you interested in participating in IPOs like the ones we talked about today? What do you think of Bumble's IPO? And what do you think of Ant's failure to actually launch their IPO on time and the potential consequences behind it? Love to hear your thoughts, your opinions, and how you're investing as an individual investor in those comments. And appreciate Crystal and Dylan and everyone else that's actively engaging in those comments. Really do want this to be a two-way conversation. So thank you guys. And if you guys are enjoying these videos, please smash that like button, hit subscribe if you're new to my channel, and ideally hit that notification bell, because let's be honest, realistically, social media is not particularly interested in pushing this sort of content to you guys. So if you're not actively trying to consume it, you're probably never going to consume it. So again, really appreciate you guys interacting with these videos, and we'll see you in the next